Well, a spectacular set of numbers reported from Uno Minda Group, and I'm joined by the group CFO, Mr. Sunil Bohra. Thank you so much for joining us, sir. 17% growth and 11% PAT. In the muted quarter two, when everybody is actually facing negative results, you are actually above 10 with that matter. What are the factors driving these results, and what are you anticipating that has fueled this number, sir?
So you are right. There is a lot of hard work and strategy behind this 17% growth. It is not something which we can achieve in a quarter just like that. So we have been consistently working on a lot of aspects, a lot of factors. First of all, we know that a lot of our products are agnostic to ICE or EV or any other fuel which vehicle may run on. So a lot of these products are actually running on a premiumization theme, be it a lighting going to LED or a steel wheel going to alloy wheel or premium seats or a lot of EV products which we are working on, sensors, controllers. So we've been consistently working on a lot of these strategies to see that we consistently and continuously outperform the industry growth. So our endeavor is always that whatever industry grows, we should grow at least 1.5x of the industry growth. And that's the theme we have been working consistently for past many years. And if you see a lot of our project expansions, today we have almost like 13 projects which are under expansion mode. And all of these products will help us consistently sort of outgrow the industry. So one is the premiumization theme. Another also is how do we gain more market share in the products we operate. Number three is how do we get more exports, though in the last quarter we had some headwinds because of the overseas markets having some challenges in terms of volume, but exports as a theme, we have been working very consistently in a lot of our products. We have added more customers there. So there are a lot of factors which we have been working, which will help us outperform the industry growth, not only in the last quarter, maybe in the medium to long term as we move forward.
All right, Mr. Bohra, we've been speaking about the R&D bits as well. Close to about 700 odd crores you have been investing. If I may ask you, what is the group investing in R&D for? And what are the key 3 to 4 focus areas that the R&D team is probably working on?
Yeah, so you are right, Chetanji. So a lot of investments we are doing in R&D and engineering is for the future. So while there are engineering centers, R&D centers which will work towards uplifting the existing products, we have a completely dedicated R&D centers under the brand Create in a lot of cities headquartered in Pune. We have something around 1100 engineers plus working on R&D, where we incubate a lot of new projects. Which are futuristic, a lot of EV projects, a lot of electronics doing projects, we are incubating in-house. So what we do is we take a leap of faith, we onboard a project to incubate, we work it to a level, bounce off with some of our customers, and when we see some interest, that's where we get into the second stage of proto development and building on that. A lot of projects we are also working in terms of localization. So, industry has been working very aggressively past few years, and a lot of our businesses which have grown or build is around localization. So a lot of projects we are doing in-house are also surrounding around or incubating around localization, how we can help our customers localize, because localization has multiple advantages, you know very well, right?
Also, you've been also speaking about and hearing about greenfield expansions. Could you give us more idea and what are these greenfield expansions and how much return on investment are you anticipating with this, expansion plans?
Yeah. So as of now, we are having around 13 projects which are under execution, totaling to around 3,000 crores. When we talk of returns and kind of projects, first of all, kind of projects we have been working on, they are all around lighting, alloy wheel, EV projects, there are multiple in EVs. So expanding in India, expanding in overseas, we are setting up a new project in Indonesia for four-wheeler lighting. So we are working on multiple projects in terms of expansion. In terms of return on investment, we have got a very clear goal of achieving 20% pre-tax return on capital employed in third full year of production. And the board consider those projects only, otherwise they are being sent back to reevaluate. So there's a clear capital allocation policy in terms of where do we invest and how much do we invest.
All right, Sunilji, also, looking at the numbers, what is the strategy that you as a CFO is putting into place to ensure that the last quarter revenue of that EBIT of 20% and PAT 11%, revenue of 17% is maintained and probably been expanded? So any measures, any financial measures that you're undertaking to ensure all of these?
No, absolutely. We are in a very competitive industry. First of all, let me tell you. So you have to keep your cost always under check. There is no margin for error. Our customers are always demanding, always asking for more, asking for improving the cost, doing VAV, lot of stuff. So we have been consistently on those stuff. Yes, we have our internal matrices to make sure that while we maintain our returns, we also have to keep focus on our margins. So while 20% pre-tax ROCE is a focus area, even we have some guidance on margin as how do we maintain some minimum margin to be able to ensure that we get that kind of return on capital. Yes, we have multiple businesses where asset turn ranges. Asset turn is maybe from 1 times of capital invested to almost 2.5 times. So while the ROCE is the first priority, margin also is a priority, so that margins should not be so low that ROCE goes off for a whisker. So there is a very strong focus on maintaining margins. Yes, number one is ROCE and number two is margins.
And also, how's considering you had a fantastic performance in Q2, how's Q3 and Q4 looking like? Do you think would be, since you've given most of the orders and executed them mostly, that's why you're getting such good numbers. How are Q3, Q4 looking like?
So based on current indents, what estimates we are getting from our customers, definitely Q3 normally tend to be little softer than Q2.
Only for auto component industry?
Yeah, because Q2 volumes you have because of the festive season, you have a lot of volumes, and Q3 you also have a shutdown at the quarter end. So because of that, there might be a little bit of softness, but otherwise, if we see the indents, if we see the volumes, we should be able to maintain the growth rate which we have been able to do in last few quarters.
All right, well, Mr. Sunil Bohra, thank you so much for joining us. That was Sunil Bohra talking about how important it is to maintain your costs in check, and of course, the company plans to maintain steady growth despite a muted quarter 3. Thank you so much for joining us, sir. Thank you.
Thank you.